You're watching the MEM Edge show. This is the show where we put you in front of where the action is in the markets. Let's go ahead and get started. Exciting day in the sense that it is a Monday and the markets are actually trading up today. So we're going to go ahead and review the broader markets. You want to make sure that the markets are in a place of healthiness before you potentially dive in. Seeing a lot of green here today. We're also going to take a look at the potential move back into biotech stocks. This is an area of the markets that has generally sat out the rally, certainly earlier this year, into the current chaotic moves that we've had now, but there does seem to be a bit of firming up in that area. So we're going to go ahead and cover that. A move into biotechs would be bullish for the broader market simply because they are certainly more risky asset class. And then we're also going to take a look at an area that given that the markets are weak, even though we are seeing a bit of strength today overall, you'll see that there is still a little bit of weakness. We're going to take a look at consumer staple stocks. That's an area that offers two things. One is yield in the light of super low interest rates. We're going to dig in there and uncover some really interesting, good-looking charts. And then stocks that are due to report earnings this week. We're not quite done with Q2 earnings, and there are a handful of very high-profile names that you are going to want to watch their earnings, simply because it can be moving as far as, depending on their results, you could easily see a spillover effect into other areas, other stocks within those given groups. So let's go ahead and get started. We will begin by taking a look at a daily chart of the S&P 500 index. So each one of these bars is one day of trading activity. I've gone ahead and overlaid some simple moving averages. The green is your 10-day simple moving average. Red is the 50-day. And then we have the 200-day simple moving average down below. The relevance here is in a healthy bull market period or an uptrend. You are going to most likely see this the index finding support at an upward trending shorter term simple moving average. I'm taking us back into this June-July rally. Currently, of course, we have broken down below. And for me, this 50-day simple moving average, that's going to be the real divide. If this index remains below this 50-day simple moving average, I'm still calling it a near-term downtrend. We can see I have also plotted here the RSI, that's your relative strength indicator. It is heading north. That's positive. We'd like to see that, but it is still below this net neutral, this dashed line, which is a 50. I'm going to take us back to that June. This is out of that May 10% correction. What the appearance is as we come out of that, we can see it's heading upward. It does eventually break above that net neutral 50 back here in June, in line with the broader market indices, breaking up above that 50. So that is what we are going to need to see from my work before I feel that we are in a near-term uptrend. Let's go ahead and move down. At the bottom here, we have what is called the MACD. That's your moving average convergence divergence. We want this black line to cross up through the red, again, taking us back for historical precedent, the June downtrend reversal, the MACD black line up through the red. And then once the MACD gets up above 0, and then we can line up all of those factors together and know that we are in a healthy, broader market. So that is where the current markets are right now. And I did want to take a minute to mention that today's show is being brought to you by MEM Investment Research. And I'm going to take you over to the website. If you go over to MEM Investment Research, you can check out a lot there, but I will tell you that today, in honor of this sponsorship, every one of the courses are 20% off. So you don't, it's the promo code is StockCharts. This is my primary main course. It is never on sale, but given the market dynamics, I would urge you to take a look at this. We are close to reversing this downtrend in the market, so you can take advantage of that very special offer. So let's go ahead and get back. I showed you the broader market indices. From here, we are going to take a look within those markets. We're going to take a look at some of these sectors as well as each of the broader market indices. This is what's called candle glance. You can access this from the initial page interface on StockCharts.com. And then I've overlaid an RSI, that's your relative strength indicator, sorted this candle glance view in descending order. So we will immediately see this, these are 2-month charts, but it will give us a very good sense of where the strength is in the markets. And we want to know where the strength is because when you are putting your capital to work, ideally you do want to be in those stronger areas of the markets, those areas that are seeing significant money flows with an eye for them continuing to outperform. So what we are seeing here, XLRE is the real estate sector, and REIT stocks have really been powering this area to a new high. These stocks have high yields. They are counterbalancing the very low yield seen in the 10-year treasury, down at about 1.5%. A lot of these real estate trusts on average is at least 3%. And then we can see gold. Now, gold is pulling back today. This has been a safe haven area in this recently high volatile period. And today with the rally, we are seeing gold stocks pull back a bit. Here are some consumer staples. Now, I talked to you about this. These stocks also offer on average over 3% yield. And we are going to be taking a look because not only are they providing that high yield in a low interest rate environment, there are pockets of high growth in staples. They are not just your old school soap stocks, and we'll get into where that growth is emanating from and precisely why. I put in the semiconductors because we are seeing a very significant 3% rally in these semis, and that is very, very encouraging. Ideally, we will have time because I have a couple of areas here I want to point you to. Not all semiconductor stocks are experiencing this nice rally, but those that are the ones that you are going to want to key in on and certainly know about. So then from there, as we drill down, taking us to this weakest area that is currently the Dow Jones Industrial Average, a couple of factors here. Number one, there are only 30 stocks in this index, so that when we see a pullback, volatility, and you have such a small number of stocks, it will tend to get hit harder. Industrial stocks also, you have a couple of names in here that are going to get harder hit by these potential tariff fears, but we can see it's having a nice rally here today. So let's go ahead. I mentioned to you that there are some companies that are due to report earnings this week. So I did want to go ahead and take a minute and share those names with you, and we can see where they are standing now, and also point out to you the relevance of the that particular name. This first one is Intuit, INTU. This is a very well-known software stock. Before we get into it, however, let me just go ahead and share with you IGV, which is the software ETF. This is really helpful. You can do this for any number of industries where if you are looking at a particular stock, go ahead and take a look at how their peers are doing. I'm pulling up, this is the North American Tech Software ETF, IGV. And what I wanted to point out to you here, this is taking us to the beginning of 2019. Take a look at this significant outperformance, by far one of the better performing subgroups within the broader markets. We did have that May correction. This area suffered, but it came roaring back during that June, July rally, that downtrend reversal. More recently, it did get hit. Now, these software stocks will tend to get hit a bit harder than the broader markets when there are China tariff fears. So we did see that. Let's take a look today. The IGV is up just a little, certainly not a lot compared to the rest of the markets. So we are still in a process of potentially reversing this downtrend, and we would want to see that. That would be a signal that the former leadership was back. When those leadership groups do come back into favor, that is very constructive for a continued rally. So let's take us back to Intuit. These guys are due to report their earnings on Thursday. This is another stock that was a significant outperformer. This is part of my MEM research Edge report that comes out bi-weekly. We picked up Intuit as a buy candidate early in the year. It did fall out of favor. So once it broke down here, we did remove it. It is back on the list because of this move here, and it's still finding support above this upper trending 50-day simple moving average. Let's take a look at the action today. Going into earnings, it's up almost 1%, a bit more than that ETF software that we were looking at. So it is constructively now broken back above each of these key simple moving averages. The RSI is not quite positive yet. We want to see it break up above that 50. Let's go drill down to this MACD. We talked about a need for the MACD to the black line up through the red while being above this net neutral. The company is on track. Analysts are revising earnings estimates going into their Thursday report, and that can be really quite bullish. They're calling for 16% in earnings growth this year, 13% for next year. So keep an eye on this. I am not a believer of buying into earnings. We've seen too many blowups. We've also seen big gaps up. So I will leave that to you, but certainly from my work, I would tend to be a bit cautious. There's oftentimes ample time to get into a given stock after they report. Let's take a look at another stock that is going to be reporting later this week, on actually tomorrow. This is Home Depot. And very interestingly, we can see that they are experiencing a significant 2% rally today. Home Depot is a stock. Take a look at this big outperformance here in June and July, and similar to the beginning of the year. The company did falter here. This is in line with those tariff fears. Quite simply, a lot of retailers did get hit, and that is because the proposed September tariff is going to be hitting retailers just square between the eyes. Even though Trump did remove some of those September tariffs, by and large, they did get damaged here going into this week. Now, we are seeing a number of these retailers pick up today. That is encouraging. Analysts are also revising estimates going into earnings for this stock. They are due to report tomorrow, and the company does offer a yield. It has a 2.7% yield. I'm going to share with you another stock that in the retailer space that got hit, that reported last week. Take a look. This is Walmart. We can see the stock really gapped up and is continuing to trend upward subsequent to their earnings. So more as a one-off or an example of what we may see. Home Depot certainly is its own animal. They have a lot of very positive initiatives in place, but Home Depot, again, is due to report tomorrow. I'm going to take a minute here. We need to take a break, and then we will come back, review several more stocks due to report, as well as those biotechs and staples stocks.
Missed the live show? Want to rewatch a workshop? Tune into the StockCharts TV YouTube channel to catch up on the latest programming and content. All of our live shows, workshops, special guests, and more can be found there. Each category has its own playlist, so it's easy to locate. We even have chart school and creative strategy videos to help you become a better technical trader. Leave comments for our commentators, like your favorite videos, and don't forget to subscribe to our YouTube channel.
Welcome back. So we do have just a few more stocks here that I wanted to cover that are due to report. This is Salesforce.com CRM, and it is another very large, well-known software stock. They are due to report their earnings on Thursday. This company, I will tell you, I'm not pointing it out because it has been a fabulous stock. That has actually been the opposite. The company had several large acquisitions and their earnings have been a bit rocky. So the stock overall has not been outpacing the broader markets. It has not been doing much, but I'm pointing it out because it is a bellwether name. There are a lot of eyes on this stock. It's widely owned institutionally, and we can see that it is below any of these relative, these simple moving averages. So overall, the stock is not in a healthy position. It's just to point out to you, keep an eye on that number. Let's move on to one last name that is due to report. They're coming out on Wednesday. This is Target. TGT. We're looking at a daily price chart. Take a look at this gap up. The company came out with very strong numbers last quarter. They also are a company similar to Walmart that has a number of initiatives. Their digital sales team is really working overtime. They have some wonderful, they really expanded digital sales. They also offer pickup where you can order, they will deliver items to your car, and a number of other initiatives. So let's take a look. It did falter here in line with those trade war fears that are potentially due to impact these retailers. It's having a nice 2% rally. The stock is now up here above that red 50-day simple moving average. MACD had that bullish crossover, and the RSI is positive as well. Again, look for them. Analysts are revising estimates higher. They are due to report on Wednesday. So those are a couple of stocks. Let's go ahead and move on. I did want to share with you, first of all, I will take a look at IBB. This is an ETF that takes a look at biotechnology stocks, and it's NASDAQ based. But more importantly, this is what I was referencing in the beginning of the show, the fact that biotech stocks have really put in a very dismal showing. This is the beginning of the year. It had a little bit of a rally in that January period, a little bit of a head fake into May and March, and then really since then has just been in a go nowhere environment. But let's go ahead and drill down. I will show you some areas that are potentially beginning to percolate. So in order to get there, you are going to want to go to the S&P sectors. This is accessible from the first page of StockCharts.com. And quite simply, this initial view is the performance intra-day. You can go ahead and sort that 1 week, 1 month, and so forth. But I'm going to take us down here into this health care sector. And from here, you can just go right into biotechnology. And the view that you're seeing here, these are a number of small cap stocks. I will tell you, you can go into this biotech industry subgrouping any given day, and you'll see these stocks popping up 40, 50%. These are super small stocks. And this is regardless that the IBB that we just looked at is not performing well. Always see this type of I'll say popping in these stocks, for lack of a better word, because they have clinical trials and FDA clearance and good news that's coming out. So they will bounce around like that. I will tell you, it takes a certain person to be able to trade these stocks. There are over 500 biotechnology stocks, but what I want to do is focus on those larger cap names, those stocks that trade a bit more orderly and can be more accessible. So what I've done is gone ahead and sorted it by you. You can then do it by large to small. So let's go ahead down here in biotechs and take a look at some of these large cap names that are potentially picking up here. So this first name we can see is ABBV. We could still be a bit early. What you can do is go ahead and use this thumbnail view by hovering over the ticker symbol, and we can see that a number of these stocks that are having a little bit of a move today are really down and out in line with the broader markets, but not all of them. So I'm going to take us to 2 names currently, actually 3, maybe even 4, that are doing well and that are positioned, that have these high scooters. That's your stock chart technical rating. So down here you can see Amgen has a 79 rating. Could be very interesting. Let's go ahead over and take very quickly a look at this particular chart. So here we are looking at Amgen, and you can see that the stock has really had a significant updraft here recently. And a lot of that has to do with the company coming out with positive news as well as trials. And then this pickup here was earnings related. The stock did come out with numbers. Analysts are revising estimates higher for next year, and then we can see this subsequent big move up here. This is related to positive clinical trials on a drug, but the stock really is holding in well. Given this big, robust move, I would wait for this 10-day simple moving average to catch up to it in bullish fashion with an eye toward a potential move up. So let's go back to that listing again. There are a couple of other names that I did want to go ahead and share with you. Wondering if I should yeah, so we can go ahead down to this area. I did go ahead and sort it by market cap. From there, we're just going to take a peek at some of these names that have these higher scooter ratings. This is a mid-cap name, NBIX. Take a look at this action here. The stock has broken back above each of these key simple moving averages, acting very constructively. It's finding support at an upward trending 10-day simple moving average. This gap up here is earnings related. Company came out with good numbers. We are in the process of really coming on quite strong as these simple moving averages are finding support. I can, without going back to that exercise, I'm going to point out a couple of other names within biotech that are starting to pick up, again, with an eye toward potential strength. This is INCY, Insight. We can see this stock is poised to break out of this nice 3-week base. So if we see a breakout above that 86, that would be quite constructive. BV is another stock. Now this one I'm only pointing out to you today because it's up about 3%. They did get clinical they did get FDA clearance on approval for an JAK inhibitor, and we can see it's broken now up above that 10-day, but the stock certainly has quite a bit more in the way of work. But if we see this RSI break above 50 and this MACD trend upward, you could see a nice rally, certainly up to this 50-day. If it breaks above that, up to the 200, but certainly for now this downtrend is in place. So interesting that we are seeing a potential move into biotechs that certainly would be quite bullish for the broader markets. Let's go ahead, and I mentioned to you that despite the fact that we are seeing a really nice rally today in the markets, and a lot of it could be a relief rally certainly among some of those beaten down retail related consumer staple stocks. But what I'm going to do right now is take us back to that summary. And quite simply, we can see these areas of the market that are up here in the forefront. Energy has been doing very poorly. Look at that very low scooter rating. I talked about consumer discretionary getting hit, those retailers. So it's, again, very good to see that rally into that area. But consumer staples has been a very strong area. Certainly because of those lower yields, there is an attractiveness to it. But I'm going to take us into the actual grouping, and I'll share with you some individual stocks that not only are providing a higher yield, they're in a defensive area, there are also pockets of growth. And certainly this first name that we can take a quick look at, they did come out with numbers. They did gap up today almost 10%. But we can certainly take a look because this to me is interesting, because this 10% gap up not only pushed this stock above these shorter term simple moving averages, we have a number of other dynamics that are in play. A lot of times people think that after the stock gaps up, you've missed the play, but let's take a look here. This is factor number one. The stock did break out of this nice base here. This is another of those consumer stocks that got beaten down arguably unnecessarily with the tariff fears, but this is that breakout. We can't really see the volume, but I will tell you it is trading on above average volume. Take a look at this RSI now in positive territory, MACD black line up through the red, poised to go into positive territory. So we have a number of characteristics that would argue that Estee Lauder still has upside, despite the fact that it's up over 9%. Let's go back to that listing on consumer staples that are normally viewed as very defensive. And what I wanted to point out to you is the fact that there are growth stories at play here that are also pushing these stocks up. I already shared with you the bullish with Walmart. We can drill down into some of these other names. And in fact, what I will do right now is take us into another area. These are brewers. Some of these brewing stocks are actually performing quite well. I'm going to share with you a company that reported last week. This is SAM Boston Beer. And take a look. I'm going to quickly annotate this one as well to point out to you some positive characteristics here. We can see the stock really okay. It broke out of this base right here on the release of their earnings, and the stock is continuing to trend upward subsequent to that. We can also see that this RSI is positive, and the MACD, sorry about that, the MACD is also up here in positive territory, trending upward. So we do have a constructive looking chart that we can couple with strong earnings. So there is a growth story there as well. Let's go ahead back to these different areas that we can go ahead and drill down into, again, sorting by scooter. You wouldn't believe it, but Church & Dwight has a very constructive looking chart. Again, a stock that is breaking out, in this case, a 2.5-month base on volume with other outside characteristics that are pushing this stock higher. I'm taking us back to that sector subsort where it's providing you with those industry groupings among the sector of the consumer staples. So what we can do is go ahead and take a look at some of these food products. And there really are any number of growth stories here. Tyson TSN is getting into the Beyond Meat type of protein food products. So we can see that this stock broke out in the beginning of August. The stock broke out of that very nice base, did so on volume. And what I wanted to point out here is this particular move is their announcement that they are in fact going to get into that space. The company reported earnings back in here, so it is acting very constructively, finding support at this upward trending 10-day simple moving average. Analysts raising estimates for next year into 2020. They're looking for 17% growth. The stock offers a 1.7% yield. So you can see that there are any number of names within consumer staples. So it's more from an eye toward growth stories in addition to that defensiveness, as well as the fact that these stocks do offer a nice alternative yield to to the 10-year treasury. I was going to take one quick minute here to take us to the semiconductors because there's a lot that's going on there. So going back to this sector, what you want to do is go into technology and you'll see semiconductors here. Quite simply, this scooter rating, StockCharts technology rating, this is going to be your friend, because up here are those better performing semis, and there are very sound reasons. This is Lattice LSCC, a lot going on in chips that relate to gaming, storage chips as well, and we can see LSCC holding in remarkably well. And I am close to the close, but I did want to remind you, go over to MEM Investment Research. Everything is 20% off in the way of courses, as well as my MEM Edge report. Urge you to take advantage of that. And for those of you trading, happy trading.